I'm going to cut straight to the chase. If you aren't in my Discord server, you're missing out severely. The best alpha in crypto takes place within these channels, including coin discussions, market analysis, degen behavior, and more. It's completely free and I look forward to speaking with you inside. Hello everyone, welcome back to another video on my channel. I've seen a lot of negativity and fear creeping back into this space in the last week, so I thought it's best to address it all. People are panic selling, lowering their initial targets, feeling stressed and overwhelmed. I've had messages from my community saying that they're worried that prices won't rise again, that we won't get alt seasons, and we've already topped for this cycle. The aim of today's video is to provide objective analysis on the market, on Bitcoin, on crypto, but also what's happening macroeconomically. A lot of these crypto influencers focus solely on the crypto markets, but we need to factor in global macroeconomic conditions too. As always, none of this is financial advice, it's just me giving my honest opinions to my community. So let's begin with Bitcoin. We've had some bearish price action as of late, which has thrown a lot of investors off. Whilst only a week ago we broke above the key psychological level of 100k and it looked as though we were gearing up for a nice rally, the very next day this was wiped out with a 5% dip, and we have subsequently wicked down as low as 91k. Bitcoin has been ranging between 91 and 95, but struggling to close above 95k on the daily. I think this level can be seen as a nice bounce and reversal, so let's see what happens in the near future. For those wanting to know why Bitcoin dragged down, there was some big news which came out a few days ago from the US. The Department of Justice received the green light to sell $6.5 billion worth of Bitcoin from the Silk Road crypto hack. So once this news came out, of course, investors and the market began to panic, hence the volatility we've seen for Bitcoin lately. The debate is, of course, whether the US decide to sell or not. Right now, we're still under Biden's administration, so the fear is that Bitcoin could be sold before Trump's inauguration on the 20th of Jan. If it's not, I'd like to think the US would hold the Bitcoin rather than sell it, seeing as the new president is taking a pro-crypto stance and insinuated the formation of a strategic Bitcoin reserve, but I'm not 100% on how it will work. I'd be a bit confused if the selling took place whilst Trump was in charge. However, given this news, we could have priced the selling of the $6.5 billion in already. Going down around 10% in a couple days may not be extreme for the Bitcoin of old, but for the new Bitcoin, this is pretty significant. And by that, what I mean is, given the ETFs and constant inflows, the rising number of nation states interested in purchasing Bitcoin, Michael Saylor and MicroStrategy also involved and being a big player in the price action, there are a lot of factors to consider which are a significant improvement and show of strength for Bitcoin as an asset compared to previous years and reduce the severity of fluctuations. So if we do get more bearish news, how low could we go? Being in this little accumulation range is fine in my opinion. I wouldn't be opposed to ranging here for a while. Sideways action for increased duration typically leads to more explosive moves to the upside, and this also allows for some rotation into alts potentially. However, if we do get further downside and close below 91k, the next level I see us reaching is 85k. We could start trading in the 85 to 90k zone, going back near to the November election times. Is this the end of the world? No, it's not ideal, but it's not the worst. It will cause a further shakeout of weaker hands and liquidation of leverage players, which is needed for us to continue rallying to the upside, and this will just cause some short-term pain and fear. This wouldn't be great for alts though. I'd smell a bloodbath if this were to happen, but we should be used to that by now. Alts have retraced 50 to 75% numerous times over the last 18 to 24 months. Then we got to discuss timing. Everyone is saying Trump's inauguration will be a sell the news event, but what if that doesn't end up happening? For all we know, Trump could come in and on day one officially announce the strategic reserve and boom, back up above 100k and beyond. Other countries will start scrambling to buy their Bitcoin too, or the opposite could happen. The US could start fueling global tensions further, the prospect of a world war increases and we get another black swan event to wipe out markets. The truth is, no one knows guys. As economists we can just stay stoic, equanimous and account for all eventualities. Moving on to macroeconomic analysis, did the Fed make a mistake with strong rate cuts towards the end of last year? I said to my community I thought a 50 base point cut may be too large and a 25 may have been better suited for the economy. And now there are reports that the Fed will only cut interest rates once over the next 12 months, and there's a 45% chance of no cuts until past June 2025. Again, we're just speculating here. The recent strong labour market data which came out a few days ago, however, points that the US is in the right direction. More jobs implies a recession is being avoided and the economy is strengthening. So why are stocks trading lower following this report? Surely a growing economy with lowered interest rates means investor confidence is being restored, risk is switched on and capital is rotated from safer investments into higher risk ones such as stocks and crypto. However, the S&P is down around 2.5% in the last week. Inflation could be seen as on the rise again, and in uncertain times, people may be taking off risk, seen by the Dixie/dollar strength increasing in recent weeks. Less risk means people look to be safer with their capital and hold the dollar. This will naturally cause riskier assets like stocks and our Bitcoin or crypto to decrease too, as we've seen. The fear and greed index in crypto is corroborating this, decreasing quite some way in the last 30 days. You guys know my opinion on this indicator. In isolation, not the most accurate tool, but when used in conjunction with others, it is quite useful. When comparing gold, which is a traditional hedge against inflation, and the dollar, these usually have an inverse relationship, but we can see recently the dollar increasing simultaneously as gold is. This illustrates the uncertain times and potential rising inflation and explains why our risk assets aren't performing well. But remember, all of this is speculation and a lot could change once Trump and his team take over and begin implementing their strategies. Taking a look at the Fed's net liquidity against Bitcoin, this is basically the amount of money available in the market and is useful in measuring the overall liquidity of the markets. The higher this is, the more likely we can expect markets to do well. During the previous cycle from 2020 to 2021, the huge surge in Fed liquidity coincided with Bitcoin reaching new highs and also alts pumping massively. So far, the net liquidity has moved sideways for the best part of a couple years, but it will certainly be interesting to see what happens this year. If we hopefully start to see the rise, we can expect Bitcoin and especially altcoins to begin to rise and lead to alt seasons. Whether this is sustainable or not over the long term, I don't know, but just for this year or for the next few months, it would be nice. Please note that this is not representative of global liquidity. I was struggling to find reliable indicators and data for that. Given all the information we have covered so far, and there's a lot more which I haven't included, hopefully you can now see why it's so hard to predict market cycles. You can have a thesis and build around it, but remember, things are subject to change. So unfollow and stop watching anyone who says this is guaranteed to happen. My original thesis going into this year was a double top situation for Bitcoin, similar to the previous cycle. Have I changed my mind on this? Not yet. I haven't seen enough evidence in crypto or macroeconomically to completely change the way I view this. The first top in the previous cycle came towards the end of Q1/beginning of Q2, and the second and final alt season came in Q4, November 2021. We have followed the 4-year cycle theory this time around pretty well, almost to the point where I'm thinking everyone wouldn't expect the same thing to happen again because that would just be too easy and predictable. So it actually does end up happening. The timings may be slightly different, but the double top could still take place. I have to do more ongoing research before this is invalidated. Also, these shakeouts we've seen are so common in a bull cycle, and the recent one shows a huge improvement from last time around. In January 2021, a very similar time to now, just 4 years ago, Bitcoin fell around 30% in 2 weeks. Now that's a serious shakeout compared to the 10% dip we've had so far. Of course, we could go lower, but just something to consider. Following this shakeout, it then rallied 120% in 3 months. If you were shaken out here, you missed out on generational returns on your coins. If you caught the dip, you would have 2x'd on Bitcoin alone, let alone some of the madness that was going on down in the altcoin trenches. Then we had another drop, this time 50% over the next 2 months, before rallying up hard again in the final alt season. I don't think we will see these significant levels of drop in Bitcoin this time around due to the strength and big players, which I've already mentioned, but who knows? We will definitely see it and have been seeing it in altcoins though. Anyone last time around who managed to time their buys and sells accordingly at these points is probably laughing on their own private island right now. So to put it simply, I still am leaning towards a double top theory. The first one coming in Q1/Q2 this year. I'll be using market sentiment, Bitcoin and USDT dominance, the others chart, macroeconomic factors, and probably most importantly, my own gut instinct to take profit in the next couple months if the opportunity presents itself. Then hopefully buy back in over the summer before fully exiting the market towards the end of this year. This is all theory. In practice, it probably won't go as swimmingly as I want it to, but hey, trying to time the market is fucking difficult. This cycle is definitely stressing me out, like most, but I like to be in control of my stress. Like I said at the start, be calm and collected and don't let the masses influence your investment decisions. If I did that, then I wouldn't have been buying crypto throughout 2022, 2023 and be in the position that I am today. I've said it throughout my channel and I'll say it again. Please, please, please keep some cash on the side. I ran a poll in my server and by extrapolating the data, 50% of you have between 80 to 100% of your net worth in crypto, which means either you can afford an extremely high level of risk, maybe given your ages, or you're all degenerates. Given how I can see the average age of my viewers, I'm leaning more towards the latter, but I hope this isn't 100%, and you've got at least 5 to 10% in cash. So when times like this happen, or we get further uncertainty, or even a black swan event, you can buy. It doesn't have to be into high risk altcoins. You can buy Solana, Ethereum, Bitcoin, knowing they will of course go back up. Let's at least be intelligent degens here, yeah? But yeah, that's the video on my current 2025 market thoughts, guys. This will most likely change throughout the year, so I may make this a monthly or weekly thing. These videos don't tend to do as well views-wise for me, but I think it's important to provide some perspective for you all and share my thoughts. If you enjoyed, please subscribe and leave a like, join my free Discord, and I'll catch you all in the next one. Take care.